appreciate questions and things like that as far as comments. So if you want more food, there is more food out. Help yourself, make a trip. Again, I'll announce you need to use the restroom. Behind this wall over here is the men's and women's restrooms. So kind of get started on here. Just want to thank everybody for coming out. Want to also, we've got a few board members here tonight and former board members. If you are a current board member or former board member, would you stand up for a minute? I know we got Eric Raby, we got Jeff Moore, got Kevin Schrader, got Ted Knorr, got a few folks, got Rich Gaffler. So appreciate everybody making the time and coming out. So I want to thank your employees for helping put things together. With that, we'll turn this thing over to Brian Burke with John Stewart Associates.
Thank you, Roger. Appreciate it. It is always fun to come back to NERSA. Actually got a few classmates in the crowd, and it was 40 years ago I'd been playing kickball or basketball or square dancing or whatever we were doing during PE in this very room. So it's always fun to be back at home. So I think just to get started, we're probably 18 months or so into a downturn into the marketplace, and everyone wants to know, okay, when do things get better? That's the biggest question that we have, and that's the biggest question we'll continue to have until it does. And there's definitely a few signs of some hope out here in the market. It has been tough. I certainly recognize that and realize that. I do think we're in for a period of time that is more volatile than we have been in the last few years. Volatility is not a bad thing. We like volatility in general in the market. It gives us opportunities. Sometimes the market can just prod along at this very, very narrow range, and it never wants to move anywhere, and those are some of the most boring markets we have, and opportunities are pretty limited. I do think we're going to have a fair amount more volatility in the next few years. So I put a list together on this first slide of things just to watch out for, things to have on your radar screen that can continue to provide for some opportunities in some of those volatilities that we see in the marketplace. I know we don't have the handouts, but we've done that at times in the past. But this presentation, if you want a copy of this, don't feel like you have to take copious notes and pictures and all that kind of stuff. If you want this, just get a hold of anyone at NERSA. They'll have a copy of it, and they can email it to you. You can look at it yourself without needing to read or take notes on this. But one of the biggest reasons I think we're going to have more volatility in the next several years, quite frankly, is because of the gentleman who takes office on January 20th. When you think about the type of administration that we had under the original Trump term, we're going to see similarities. We're going to see similarities in just the simple fact that Trump wants his name in the headlines every single day. And when those names are in the headlines and he says the things that he says, he does the things that he does, he's more bold than we've seen any other president be with some of the statements and policies. That creates volatility, plain and simple. Love it or hate it, it's going to create volatility. It's going to create headline risk. You're going to come in some morning and you're going to see a headline in the paper, you're going to say, where the heck did that come from? And markets react to that stuff all the time, and they're going to continue to, and we're going to see more and more of that in the next 4 years than we've had the last 4. We've got more geopolitical tension than we've had in a long time. That's not necessarily a good thing. Obviously, Ukraine and Russia has been at war for, we're going over 3 years now, but between Syria and Israel and a lot of the Middle East and all the things that are going on there, that is a more tenuous situation than we've had in a long time. One of the stats that always comes out of Trump's first term is how little engagement we had in a lot of these foreign countries with war and all those sorts of things. He's going to come in with a lot more of that than he ever had in his first term. So let's see how that gets responded to in markets. Some of this stuff doesn't necessarily point to corn or soybeans or cattle, but it points to volatility, it points to money moving around, it points to, buckets of money moving from bond markets to equity markets to commodity markets, and that moves our markets just by default. So that's some of those volatility pieces that are going to be more prevalent going forward. I also think border politics and trade implications are going to be greater. Our largest trading partner in the world is Mexico, and we're going to have Mexico in the headlines for a while when it comes to immigration policy. So that's going to lead to how does Mexico respond to some of the things that we may do, or the administration of the United States may do to Mexico to try to enforce some of the border issues that we have. Some of the retaliation from Mexico to the United States might hit agriculture. That would be bearish if it did, because they're our #1 trading partner for ag. When it comes to energy policy and its effect on ag, there's a lot of large implications for 2025. I said this statement to Roger last night at a meeting that we have. There's one thing that I think we will be the most short of in the foreseeable future. So when you think about short, it's something where the demand is growing and we don't have the supply for what we need 5 years from now, 10 years from now, 15 years from now. What we are short of more than anything else, and it's been this way for a while, is energy. We continue to use more and more and more energy all the time. Okay, it's not just crude oil, it's not just natural gas, it's not just coal into electricity, it's not just solar, just wind, it's all of it. Nuclear, all around the world, it's all of it. We are consuming so much more energy today, and you can, some of it's more recent on the electricity side, all of this new AI stuff, so much of that takes a tremendous amount of electricity to run. So we're going to continue to be short energy the further we go out into the future. So energy policy really matters, and especially where ag and energy intersect is going to be really important. So when I think about energy policy, we have an administration coming in that is a drill baby drill administration. Has not been as friendly to the renewable space as we've had in the past. The demand we've been trying to create in the U.S. the last 3 to 4 years has been piggybacked on a clean energy, cleaner air, climate type initiative of more renewable diesel, sustainable aviation fuels, renewable diesel from feedstocks. Am I dying? Sorry. Renewable diesel from feedstocks that are, do I need to repeat the last 4 minutes or something? I don't know when I went out. Okay, about 30 seconds. All right, thank you for the assist. From an energy policy standpoint, we've come off of an administration that has been pretty proactive with trying to create more renewable energies, more feedstocks that can feed into those renewable energies, and I'm just not sure about what type of administration we're going to have over the next 4 years that supports that, okay? From a very 10,000-foot level, Trump wants drill baby drill because he wants cheaper crude oil. Cheaper crude oil means lower inflation. Lower inflation means cheaper prices, and that's what he wants, okay? And that's what all economies want, quite frankly, is cheap energy. But when you think about how that intersects with agriculture, that does run a cross current against a lot of the renewable fuels initiatives that we have. This is not really an area that is right on top of a bunch of renewable fuels demand. There's a lot of other states, a lot of other geographies, even in the states of Illinois and Missouri, that have a lot more demand focused on the renewable energy space. We turn way more corn into ethanol than we ship down the river on barges. We turn way more soybeans into soybean meal, renewable diesel, and soybean oil than we do shipping down the river. Okay, it's an expanding part of our marketplace is the domestic conversion of various value-added goods as opposed to just exporting, which is what the focus of this area is in the Ursa, Canton, Meyer, those types of areas. It's a very export-focused part of the country. So when we think about how energy and ag intersect, it's really important to be on top of the ag or the energy policy side of it too. Because if it's negative for energy, it's generally also negative for ag because they go hand in hand. The acreage mix, I'm going to talk about that in another couple of slides. That's going to be a really hot debate this spring. Production growth in South America has been huge. I've got a couple of slides on that real fast, so I won't spend much time on it here. And then lastly, we've got a little bit of a weather issue that's been brewing. I'll spend a little time with that on the end as well. But I wanted to go through a couple of those just kind of teeing up statements to get started with. I always like to show a managed money slide. It basically shows what's the pre-positioning of the market. What is the market's bias right now? What does the market, we always say the word the market. The market is kind of like this living, breathing animal all on its own. So what's the market think? Well, the market thinks whatever the majority of the people that participate in the market think, right? So what is the majority of the people that are putting the most amount of money to work, the most amount of positions and contracts to work? What is their positions, okay? They're very long corn, they're slightly long feeder cattle, long lean hogs, live cattle, and they're short the bean complex and they're short wheat. Did I lose it again?
Yep.
All right. Hold on, I got some batteries up here. Let me try these out. Or not.
Somebody will do it for you.
We need more energy. It's a problem. Already short energy. Well, I'll just talk really, really loud while I get set up here. This is a managed money chart. There's some things that are encouraging about it. There's some things that are a little bit of a watch out or something that we're concerned over. I'm not really excited about the fact that managed money is long this much coin. The long position that is in the managed money category today, which is your banks like Goldman Sachs, JP Morgan, those kind of guys, is really long for this time of year. And it's only about, you know, a 30% more long than what they are right now. They would be near record long. Okay? You can look at that one of two ways. You can say they're long because they're bullish, which they have been. But it's also the group that has the most to sell when something changes. Okay? We have a report this Friday that's one of the biggest reports of the year. It's, in my opinion, the most important report of the year on January 10th, which is Friday. It's our first look at quarterly stocks, and it's our first look at, it's the WASDE report that incorporates those first quarter stocks right at the same time. And so if that report comes in a little bit less bullish than the market's expecting, we've got a whole pile of positions that can sell very, very quickly. So one of the things about the managed money long that I'm very concerned about is just how long they are. For this time of year, that's a pretty excessive amount of length. The soybean side of things, soybean meal, soybean oil, these two right here, I think this is the main reason we haven't seen soybeans fall apart in the last several weeks. You've actually seen a group of people get less short because they wanted to enter this report and they wanted to enter some of the key parts of the South American growing season, not as short as they are. So that's actually created some of the buying that's been in the beef market recently. So when I always look at the positioning of the managed money crowd, I always look at it with kind of two lenses. What's their bias right now, but what's the potential that they have to flip their position, and how aggressive could that be? I think this slide here, and it looks chaotic up on the board right now, or up on the screen, is one of the more important ones that I'll be watching through the rest of the winter and into early spring. And it's the relationship of the corn price to soybean price. When you take soybeans divided by corn, we just simply call it the ratio, but the soybean to corn ratio on average is around 2.4 to 2.45. That's kind of the average relationship of corn to soybeans. And the reason it's a pretty consistent 2.4 to 2.45 is because on average, that's about where the net return per acre for the average farmer all across the world, not just in the United States, is at about an equilibrium price. The money per acre made is about the same for corn and beans when the prices are about 2.4 to 2.45. And that average is the dashed line through the middle there. And there's 10 years of colored squiggly lines. That's the last 10 years of that ratio on a graph. If you look at where we're at right now, we're this dark green line. And we've come down to where we've been as low as we've been on that ratio for this time of year at any point in time in the last 10 years. What that is saying is, from a price perspective, corn is the most ahead of soybeans as it has been from a price perspective at any point in time in the middle of the winter for the last 10 years. We have as much financial incentive, we have as much price incentive today to grow our corn acreage base next spring than we've had at this point in time, at any point in time, or at this time, at any point in the last 10 years. I can tell you I've done a fair amount of meetings already. I've got a fair amount of meetings still to go here in the next couple of months. We've got we've got 21 or 22 offices across 14 or 15 states as far as the whole company goes. And I do not have an office today that is telling me we're going to plant more beans next year. Every one of them is telling me we're going to plant more corn next year. Every one of them. Part of it has to do with the performance last fall. We had really good corn performance last fall across most of the country, especially in relationship to soybean performance when it comes to yield. The August dryness hurt beans obviously a lot more than it did corn. And so people were already primed before this price discrepancy started to materialize, we're already primed for more corn acres. And so now we're looking at not only a group that A, likes to grow corn anyway more than beans, but now we're giving, and they had an experience that was much more favorable to corn in this last fall's harvest. Now we're giving them a price incentive on top of that. When we have that combination that runs through the spring and into the planting season, we typically see a big spike in corn acres and a drop in beans. Okay, so that's some of how I'm going to kind of wrap up this conversation about prices and some thoughts short term versus longer term. This is going to play a pretty key role in that. When you look at U.S. plantings, we tend to be right at about 175 to 180 million acres of corn and soybeans combined. Okay? What this chart is showing in blue is corn acres, and green is soybean acres, and wheat is in yellow. And the red line is the corn and soybean combination on the right axis there. We have hit 180 million acres twice. Both of those years we had about the same amount of corn as we did soybeans, right at about 90 million each. This coming spring, we're already plugging in about 95 million corn acres and 82 million wheat acres. When you plug those acres numbers into the balance sheet for next year, you get two very opposite moving sets of numbers. And that's what we're really setting up for this spring. We have, I can give you some anecdotal evidence of guys that were 60-40 corn, and that's, 60-40 one way or the other on rotation basis. On a normal year, they would flip 60-40 the other way. They're not planting any beans next year. They're going 100% corn. 100%, and so that's 40% of their, 60% of their farm is going corn on corn because they feel like that's going to pay better than rotation. We have a lot of instances of that all throughout the Midwest, of more corn on corn than I have heard of in a long time. Honestly, you got to go back to 2012 and 2013 to find the only 2 years we were above 95 million acres. I think we're going to be close to that this spring. So what does that look like on a balance sheet? What does that do to corn if we plant 95 million acres? Okay? I know it's hard to read the numbers. Again, if you want this presentation, just contact any one of your HRSA contacts and they'll get it to you. But if you put in 95 million acres on a trend line yield, that trend line on a 20-year trend is 185. We have never done 185 before. We're maybe 183 this year, but that's just, trend line is about 2 bushels per year. And I have actually increased demand for next year by 300 million bushels, and I still have an ending stocks increase of over 550 million bushels. We have a total supply of corn under this scenario of 17.8 billion, and we have never had a total supply over 17 billion before. Okay? That is a lot of corn. Now, Mother Nature has to give us that crop, all right? We have to be able to plant it in time. Mother Nature's got to give it to us. But if we have a trendline crop with that amount of acres, we will have over 800 million bushels more corn than we've ever had before in the United States. That's a big number. Now, that might be one of the more bearish ends of the spectrum, but even if we only achieve 40, 50, 60% of those acres in an increase, we're still going to be a pretty heavy corn situation. So as I look at the market today, I'm looking at opportunities much sooner for corn because of this, because of how I feel, and again, my opinion, okay, it's worth the price that you pay to get in the building. But it's an opinion about how heavy corn's going to feel once we start looking at these big acres numbers this spring. Because most people, and there's always an exception, right? I'm waiting for somebody to raise their hand. I'm growing more beans. But most that I talk with are growing more corn, regionally. And we talk with the major seed companies too, and they're all seeing the same thing. Corn bookings are up, beans are down, and it doesn't matter whether you're in Nebraska, North Dakota, Mississippi, or Ohio. They're the same everywhere, in every state. When you look at the production number, this is showing that record production. So this is more of a fear later in the year, next fall's type prices as I look at corn. The opposite is true on soybeans. Okay, if I was just to put on my blinders and look at the United States, and I plug in 82 million acres of beans, because we're going to see, I think, that drop in bean acres, again, because of price and performance last fall, we actually dropped production 4.22 billion bushels. It's down 240 million bushels of beans in 1 year in a drop because of that smaller acreage number. We actually see one of the smaller production numbers in these last 6 years on this chart down here. The problem with soybeans is what happens in the United States on soybean production is getting less and less and less important every year in determining price. There's another country in South America named Brazil that grows 45 to 55% more beans than we do, and when you add in Argentina and say all of South America, you have a continent that grows twice as many beans as we do. What they do is a lot more important to soybean price than what we do. And they're coming off one of the biggest, or they're beginning to start to harvest one of the biggest crops, actually the biggest crop, it's just by a matter of how much, that we've ever seen out of South America. That is coming, and that's more the near-term pressure that I see to the soybean market, but we may get some life later in the year just based on the US set of economics, okay? We're crushing more beans in this country every year. The renewable diesel story is still alive and well, even though it's a little murky. So you remembered my statement earlier about the Trump and energy policies and things like that. I showed a slide like this last year. There was a couple more names on this list, and that's because those plants were already built at the time. This is a list of plants that, some of them have just started crushing beans. Some of them are under construction, but I've got a couple of red lines on there. Those red lines are there because those plants are no longer going to get built. They've been taken off the drawing board. And it's because we have a lot of uncertainty about the energy policy around renewable diesel and sustainable aviation fuel coming into this next administration. So even though we've got a pretty bullish story with all these crush plants coming online and new capacity to use beans here in the United States more every year, we're actually taking a few names off that list because of crush margins. This time last year, don't quote me on this, but I think crush margins were in the range of $2.20, $2.25, $2.30 a bushel. It costs about 75 cents to run the plant. They were making very, very good money. Today the crush margins are, cash crush is 85 to 95 cents. The plants that have just been built have almost 70 cents of depreciation cost on them and construction cost on top of them, on top of that. So they're in the red for sure. These new plants are because of their high depreciation. Here's where all these plants are, the blue dots on the map are the ones being built, at least a couple of them have started up. One of the most recent ones was in Kansas, that's why that was labeled. That one started up this last fall. But the two red dots are the ones that were taken off. We had a 40 million gallon plant in Wisconsin that got scrapped, and we have a small plant in Mississippi that got scrapped as well due to the environment that we're in. Segueing that into South America a little bit, okay? So when I think about South America, the commodity that comes to mind needs to be beans first. Corn is a secondary crop in Brazil. It's almost like a double crop. Beans are here after wheat. It's a double crop corn after beans. But it's a rotational crop in Argentina. You don't see too many, double crop in Argentina at all. These are the acreage changes year over year in South America, not just Brazil, in South America on soybeans. You can see here a lot of years are up. This is 5.6%. These are around 3%. This is a 10% year. When you look at a long-term period of time in South America, we're increasing soybean acres there every year about 3%. In the last 20 years, you only had 2 years where acres were down. Okay, this is a supply smack you in the face chart. Okay, we're creating more acres in South America every year as they expand north. Okay, we can't compete with more acres. We might be able to out-yield you, but we can't out-yield a new acre. That's one of the biggest challenges that we have. And if we don't have global growth in demand all around the world, equal to or better than the supply growth of these new acres, we are becoming more supply heavy every day. And unless we have a South American drought, major problem with production down there, we're going to feel the weight of those crops. And this year, we have a very, very strong crop coming out of Brazil. Argentina's maybe a little bit more of a question mark. And to give you a little flavor on the size of this, the 10-year trend from Argentina is actually flat on soybeans, but Brazil is up 98%. In 10 years, Brazil has basically doubled their acres. Okay, most of all this expansion in all of South America has happened in Brazil, not all of South America, it's up 98%. This is the production number, sorry, not acreage number, production number. But we're up over 238 million tons. I know we all talk in terms of bushels, but that 238 million tons, does anybody know what the U.S. bean production was in million tons this last fall? 122. 122 million tons compared to 238. You go back 10 years ago, we grew more beans in this country than all of South America. That change has happened quickly, and it is not going to slow down anytime soon. One of the biggest headwinds I see going forward is the growth of acreage in Brazil. It is hard to compete against that. So when we have this, and so we have to bank on a South American weather problem to disrupt the supply down there to the extent that it brings back some demand to our U.S. market for export beans. So far this year, that's been the case. We had a relatively decent bean program for export. Programs out of URSA have been quite strong on beans. They've been really strong on corn this year. I'll get to that in a second. But the bean market's been quite strong. The problem is the number one buyer in the world of beans is China, and China has slowed way down in the last 2 years versus the previous 20. The average increase in China for 20 years, year-over-year bean imports was 6 million tons. We are probably going to see this year for the first time soybeans less imported in China than the year before. That's probably the biggest issue. At the same time, we're growing. I hit the button that time, that's not your problem, it's mine. At the same time, they're growing this much in South America. We have had China growing with them. And today we don't have China growing with them. China is flat. And that's one of the biggest bears in the room today for agricultural prices. It's led by soybeans. Okay? You can also say it's led by soybean meal a little bit as well because of all the crush capacity that we have. We're going to be a larger exporter of meal in this country, probably in Argentina for the first time in 2025. They've typically been number one. This is the corn acreage expansion. Not quite as consistent as soybeans in South America, but this is the trend of the last 10 years of production. Argentina's up 92%, Brazil's up 53%. You can't put those numbers on the United States. We're nowhere close to that in percentage increase terms for corn and beans. And again, you can't compete against new acres. We can compete on yield all day long. It's the new acres we're struggling with, and we can't. This is a picture, I've used this a lot in the last 2 to 3 months. So that's all of South America in the upper left-hand corner, sorry. All the red dots are ports. All of those ports handle in some way, shape, or form some ag products. They handle a lot of other products as well. But some ag goes through all of those ports. These ports here, this is Itaqui, this is Santarém. Those are in the north. If I had a little pointer, I'd be pointing to the very upper end of the South American red dots that are on the mouth of the Amazon River, all the way up north. That's where all the ports have been built in the last 10 to 15 years, is in the north. It's less distance from the production region for soybeans than going all the way down to Santos, Paranaguá, and the very southern part of the country. This port here, this is an amazing picture. We have a lot of export facilities in New Orleans. We have 2 facilities in New Orleans that can load two vessels at the same time. They have an outside and an inside dock that they can load. They can unload barges into the vessels at the same time. So it's a dual berth port. This is a port that has 6 vessels all lined up and loaded at the same time. There's actually 7 boats here. This one here can't load. He's just waiting. But these other 6, this is 1 port, 6 vessels. And that's in the northern areas of Brazil. Then that is where their expansion has been as far as capacity goes for grain. This is a brand new facility, state-of-the-art facility in Santarém. So when you look at the volume coming out of the southern ports, this is just 2011. This is not even 15 years ago. You had 50 million tons going out of the southern ports and maybe 10 going out of the northern ports. This is 2020 data. Okay, this is from the University of Illinois. It was a study that was done a while back. But we're well over 60 million tons coming out of the northern ports today, and the total is approaching 150. That's the grain size that South America is becoming. That is that 800-pound gorilla.
Brian, how much grain would be on those ships?
The average, okay, this ship here would be a Panamax. This is 56,000 tons, so that's a little over 2 million bushels, 2.2 or so. Some of the smaller ones, the Handy Maxes, are half of that, about 1 million bushels. You can get something they call the tubs, which are the big super maxes. that'll hold in the neighborhood of 3 to 3.2 million bushels, but that's got to be a single commodity because they're not partitioned off like these are. They're just one big vessel with one big hold. They usually use those in beans to go to Brazil or to go to China. Those are the Supramaxes. But most of these are going to be around 2 million bushels apiece, each vessel. So, what's going on in South America right now? Let's first, well, I had one more statement to make, sorry. One of the things that's different in Brazil than it is here, okay? And I'll especially use this port right here. If all you saw was this picture, and you knew it was a vessel, and you knew it was loading grain to be shipped somewhere overseas, you would look at that picture and say, it's a port, and it is somewhere near the mouth of the ocean like New Orleans is. Santarém, again, I don't have a pointer, but it's that red dot that is inland, on the top part of that chart. This is equivalent to, in the United States, this is equivalent to loading that vessel in Memphis. So from New Orleans to Memphis is the distance that the mouth of the Atlantic out of the Amazon is to this Santarém port right here, one of the newest ones they've built. That's how deep water the Amazon is. You can run all the way up the Amazon, and a lot of these places will load vessels. We can't run up the Mississippi and load vessels. There's times we can't draft a barge more than 10 feet on low water. The Amazon's a different animal, okay? We're loading vessels of grain to go to China, Europe, and elsewhere at an equivalent distance inland to what Memphis is in the United States. When you look at what moves the bean market, okay? I know I said earlier on the conversation that the lower bean acres going into next year, that might be a little bit of a spark, and it might be. It absolutely might be, depending on U.S. weather in some areas. But as much as we watch weather during our growing season, the market reacts much more intently, if that's the right word, on this part of the world, weather, this time of year, okay? One of the more volatile parts of the bean market, I think it has been this way for a few years, and I think it will continue for the foreseeable future, is the most important weather market period of time for soybeans is going to be December, January, and February. It's not going to be May and June. May and June is the U.S. crop. It's the second largest crop. It's going to be important, but for beans and global production of soybeans, which is your flat price discovery, number, it's going to be South American weather. In Brazil, in the upper part here where the red is at with the yellow and the green, that's 200% of normal rainfall down to 100% of normal rainfall, but in about 75 to 80% of Brazil, their growing season has been next to perfect. They've got all the rain they wanted. The southern part, which is where I've got this red circle, you get a little bit of southern Brazil and you get some of eastern Argentina. That's what's making the news today. When we talk about dryness in South America, they're talking about that circle. And that's about 25 to 30% of Brazil's production. It's about half of Argentina's production. Okay? So that's what's gotten the market a little bit excited here recently. That in combination with the fact that the funds were short a record amount of beans just before Christmas. So you had a group way short, and you started to bring a weather problem in South America into the conversation. That is what's taken beans from the 950 low in December to the 10.15 type range against March futures now. We may get another 20 or 30 cents out of this weather story. We might. But in my opinion, it has to get sold. You need to sell those beans if we have much more rally beyond what we've already got. Especially cleaned up on old crop. If we get to that kind of level for old crop, we're probably around 10.50, 10.60 for new crop. I would be well into my marketing plan for new crop at that level. Just to give you an idea, I haven't talked about the JSA Select Program, that'll be at the very end. We do have a 2-year program for JSA Select that was signed up this time last year, but it's for the fall of 2025 beans. It's the 2-year program. We've been 100% sold on those beans for over a month. We sold our last 25% in early December. That's how bullish, I say jokingly, we are long-term soybeans. We're 100% sold. That doesn't mean we can't buy some of that back if we have a reason to because of something, but we're 100% sold and we're very happy to be there. We are just not that friendly, the long-term picture in soybeans. The fundamentals are just too ugly. And Brazil's crop is just too big. The big report Friday. These are the trade estimates. We've seen a rally of 22 cents in corn. We've seen a rally of 50 cents in beans since the middle of December's lows. Again, you don't just, if you want to get to the presentation, just give someone a quick call. But I think some big numbers on the stocks. We're expecting 12.1 billion bushels. Last year on DC1 of 23 was 12.1. I think you should commit 12.1 to your memory. What are we going to get at 11 a.m. for corn stocks from NAS, the National Ag Statistics Group, on that big report? If it's 12.2, 12.3, 12.4, if it's higher, meaning more stocks, we've got a fund group that's long 260 some odd thousand contracts of corn. That will not be a bullish day. It will be a down 15, down 20 day if we see this number at 12.2, 12.3. If it's 11.9, we can go up 10 cents, but I think our upside is much more limited than our downside because we are pre-positioned after a rally going into this report. We've rallied 22 cents in 2 weeks already, or 2.5 weeks. On the soybean side, we look at the trade estimates. We were at 3 billion bushels last year. We're expecting 3.2, so we're expecting quite a bit more. That number may come down a little bit because I still think the bean yield might be a touch high for this past fall. But I don't think it's going to be anywhere near this 3 billion bushel number. It might be 3.20 or 3.15. We still got a lot of room in our balance sheet to absorb a cut like that. But that still may support beans and stop them from going lower quickly. If it's over 3.25 or up towards 3.3, beans will go down on Friday. So, you know, a lot of times you can have opinions about numbers and opinions about reports, and we all do in the business that we're in, but there's no more specific number on a specific date that you can make a specific call on the market than what we're going to have on Friday. You know, we're going to know the expectations, we're going to get the real numbers. You can give me the real numbers 5 minutes ahead of time, I'll put on a trade and we'll make a lot of money. Okay? But it doesn't work that way. Somebody always says somebody knows the numbers, right? Somebody at the USDA knows the numbers, but anyway. That's the tinfoil hat comment. So that's kind of our expectations there on the Friday report numbers. The upper left-hand side is the yield and production. So that's going to come from these numbers. These numbers here on the stocks will drive any changes that happen on the yield and production side. Okay, so one's kind of leading the other. So a summary of prices, kind of finishing up the fundamental side. I got a couple of JSA Select comments. So just, again, there's a lot of people out here who do similar things to what I do or what our company does. We do get paid, if you will, to have opinions. Our job is to have opinions. Our job is to not be wrong 100% of the time. Our job is to be right, you know, more than a weatherman. Okay, we try our best. But again, it's an opinion. I can't stress it enough. But given the early demand that we've seen, the corn export demand we have seen for the first quarter of the year has been fantastic. URSA's loaded a tremendous amount of corn barges. They're going to keep loading a lot of corn barges because we've sold a lot of corn around the world in the last 3 or 4 months. A lot. More so than what we've had in the last 3 or 4 years in the first quarters of each crop year. We have had very strong demand coming into this fall. And so I think we're going to see some corn price strength or at least stability hang on here for a little bit. If I still have old crop corn, and these are all futures prices, you have to adjust for the local basis in your local area. But the futures price, the very top end between now and March 31st, which I didn't put on the screen, is somewhere between 460 and 480, top end. That 460 we've only touched once since new crop. And that was, we hit 460 and a quarter, I think, yesterday. So maybe 20 cents of upside roughly from here. The reason I say March 31st is when the acreage numbers come out. And that's when I'm afraid we're going to see that big corn acres number that's going to be a little drag on the market. So I think there's a couple of months in here that we might be able to squeak out maybe another 20 cents on near-term corn. If I take those same prices and apply them to new crop, that's 450 to 460 new crop, which is December of 25. On the soybean side, old crop, I would be sold up nearly 100%. I view anything with a 10 in front of it as a good sale for the rest of the year. $10 to $10.25 on the futures price, which we are, very close to right now, is where I would be cleaning up all my old crop bushels. New crop, $10.50 to $10.75. We might get a spike into here that takes us to that level because of the acreage number in March or April, or some sort of a weather scare in the U.S. that kind of gets us into that range. But I'm afraid for this new crop number, we might see 950 before we see 1050. Okay, the 1050 may come because of the small amount of acres and a little bit of a weather scare in the United States. I think Brazil, Argentina, that harvest may take us to 950 first, which is why I'm saying get these old crop cleaned up, and if we want to, I like the idea of selling new crop too, but that's a little bit tougher sale for some folks, so this is still a target for this spring just based on the low amount of acres. We might get a pop into that range. We also have the funds short that might spike us into that range sooner than I think, but it needs to be sold if we get there. Again, my opinion, yes, sir.
On wheat right quick, harvest delivery coming up in July. Will we see 6 in front of that?
Well, we see a 6 in front of, that'd be Chicago July wheat is your specific question.
Because this last fall, right before I planted wheat, I couldn't lock in, $6 delivery. So
Wheat is not as burdensome as it was last year, but we are on the lows of wheat. I'm not that excited to add to some summer new crop sales of wheat today, but I also don't know that we're going to crack $6 with any kind of confidence. I mean, could we get into the 590s? Sure. That's only 30 cents above where we're at right now. So I think we can approach that, but I like being pretty heavily sold into that number by the time we get to 6. We have a good amount of winter wheat acres in both hard and soft, not quite as many as last year. The price determinant for wheat is Russia. One of the reasons I'm a little bit hesitant to be more bullish than what I just said is because I do believe, and again, we have to formulate an opinion about something. With wheat, the opinion that I have is we will have some resolution to Russia-Ukraine by the time we get to this summer. How it happens, does Trump call Putin? Does Trump call Zelensky? How do we work this all out? Where do we draw the lines? How does this end? Do we send any more billions of dollars to Ukraine or not when Trump's the president versus what we've done the last few years? All of that I don't know the answer to. But I know Trump's pretty hell-bent on ending that war. At least he says he is. I think he said he'll get it done in 24 hours, right? So we'll see. Okay?
Phone call. He's gonna make a phone call.
He's gonna make a phone call. You could always count on my dad to help me. But anyway, it probably will take longer than 24 hours. But I think the lever that Trump will pull is the lever of funding. Okay? Every 2 weeks rolls around and you put your hand out for $10 billion and all of a sudden you don't get it. Okay, then the thing changes a little bit. So we'll see. If that were to be resolved, that's a long way to get to this answer. If that were to be resolved and that becomes a more peaceful area than it is today, that's bearish wheat. Okay? It's going to take some time to replant that next crop because they got to kind of reacclimate themselves from that military zone. There's a lot of acres there that's being occupied by a war. And so longer term, but the market's going to react immediately to that. That's one of those headlines I talked about in the beginning. If we have a headline, Trump ends the war in Russia with Ukraine, that's what Trump's headline will say. That'll be bearish wheat. So I'm a little nervous about that piece of it. But between now and then, I think something in the 590 to 6 range is a reasonable target.
Do you see us feeding any wheat, Brian?
Yeah, we will feed some wheat in the Southwest. We will feed some wheat in the Ohio Delta range. It's most likely to be, and we already have actually, we have in the August, September, October timeframes in hard red winter wheat country. I don't see it being an outsized number though. I mean, we will feed more wheat if Chicago wheat goes to 5.25, 550, and you take Chicago corn to 450, 460, 470, that spread says we're going to feed some wheat, and we're not quite that wide yet on the corn to wheat spread. Any questions before I just wrap up with the JSA, a couple JSA Select comments? Any fundamental technical?
You see a low market in bean price before Brazil actually cut production. There's a
limit where they can't keep making money.
And it's a great question, Scott. When you take, here, okay, here's my answer to that question. Okay, here's their acreage expansion history. This is 22 years worth. This goes back to 2000. Have we had cheap beans in the last 22 years? We have. We've had 850 beans. We've had 875 beans. We've had those cheap beans before. Now that was in a little bit different cost environment, right? But we've had that in this era right here. And we had 1 year, which was 2016-17, where we saw a decrease. This 1 year was 2016-17. And they came back with a small increase. This was a pretty cheap soybean period of time from 2015 to 2020. And we saw very modest growth in Brazil. I think that's the most we can expect when we talk about a Brazilian slowdown. I would rather say it is they expand less quickly. When you have just across the road another fresh 180 that you can take a bulldozer to and take your field cultivator through and plant next spring, you're going to do that. And that's what's happening there. So
South America has X amount of acreage of beans now, 180 million or something like that, or?
That's the Cerrado number from a while back. The numbers I have seen, and I look at University of Illinois, there's also another one that came out of K-State that says how much more of that land can be developed is in the 90 to 100 million range is the one I'm using. But that's on top of what they have now. Correct. That's another entire United States soybean crop. And they've grown by that much in about 12 years. So they can grow almost another United States in the next 12 to 15
And
years.
this land, it's not like they got to do massive clearing, it's just right across the fence.
It's what, I don't put a picture on it up here, maybe I should because it was in a different presentation that was all based on South America. But they call it a poor quality pasture land. It's called the Cerrado. It's got a lot of kind of tall thistly grasses, short trees. It is not the Amazon. It is nowhere near the Amazon, okay? It is a pasture grassland that just hasn't been developed. There's no roads, no electricity. They just keep moving north. And it's very suitable for soybeans. Any other questions? Yes, sir.
Is the European Union like deforestation, soybeans, kind of dead in the water? Is that?
It's a great question, young beauty. So the question, in case anybody didn't hear it, is the EUDR policy, which is the European Union's policy for only bringing in beans. It's a lot more than just soybeans, okay? It's a whole host of products that come into Europe, but the ones that affect us and the ones that are talked about in the ag circles in the United States is soybeans. And that is saying that you have to certify that the soybeans coming into Europe for crushing or for direct food purposes cannot come from land that has been deforested. Gosh, don't put me on the year. I think since 2000 and I think it's the last 10 years or so. Don't quote me on the year, but there's a year that's on there that says that that land has had to have been in production that whole time prior to that year. It's not newly forested land, and that is a policy that is against Brazil. It is a policy that says we want to stop the amount of beans coming from Brazil because Brazil is deforesting their country. That's bad for the climate. We don't want anything that's bad for the climate. We put a rule in place to stop the Brazilian expansion to the north to grow more beans. That was Europeans' law they passed last year with their Green Party to do that. Then you fast forward a year, there's companies in the Midwest, some of them right around here, who were paying premiums for soybeans to producers if you would certify your acres, put borders around the fields and say this field has been in production for the last 30 years, 40 years, 50 years. It is not newly deforested land. And there was up to 20-cent premium, I think, in some cases, paid for that information. The EU was set to put that in place on December 31st of 2024. They said, we are not ready to do that yet. They're going to kick the can down the road another year. They did not reverse the policy. They did not reverse the law. They just pushed the start date of that law down one more year. Okay? That was not received very well by the people who went out and paid 20 cents a bushel premium for all those beans, okay? There is going to be a lot more caution if they're going to do that again, but the law is still there. So if January 1st, 2026, you want to take a boat of beans into Europe, they better have all the EU deforestation certification along with them. That's what the law says today. So do I think today that there will be some version of that comes around again for next year? Yes, I do. Will it be worded differently than what it was this past year, where if you do this, you're going to get 20 cents? It will absolutely be worded differently. It's going to say, if you do this, and Europe doesn't do that, and they don't do that, and they don't do that, then I will pay you your 20 cents. So they don't get stuck holding the bag. So I do think there will be a version of it, because I don't think the law is going to get repealed. But it will be worded in a contract that is much different than this first one was, this first year. Great question. Okay, real quick, and I'll finish up. JSA Select, we've actually been doing this now for 12 years. Ursa was one of the first companies. There was an original 6 companies that did the first year in the 2013 winter was the first sign up for the 2014 fall. It is a managed bushel program where you commit bushels as the producer to Ursa farmers. It can be delivered at any one of the locations. They've also worked with you on some various other delivery location options. And basically what you're doing is you are selecting us, JSA, to be the pricer of the futures price component of that contract. So our job in JSA Select over the course of an 8-month period of time, if we're talking about next fall's corn and beans, is to set the highest futures price we can for a contract that you're going to deliver to Ursa in the fall or later into that crop year, in the winter or later in the summer. So it is a diversifying tool. I like to, for me, what diversification means when it comes to grain marketing, it's as much, it's even more all the different ways you can sell grain. That's one way you can diversify. You can do different types of contracts. But at the end of the day, probably the biggest diversifying piece to a marketing plan is who's making the decision, okay? If you're the person on your farm that is making 100% of all pricing decisions all the time, and you have for the last 20 years, you've hit some home runs, you've had some strikeouts. Because that's just the way batting averages work. And grain marketing is no different. This program, for a percentage of your bushels, and I recommend somewhere in the 10-15% range. We have some I know that have gone as high as 25 or so. But I think that the diversifying element of this, that's the biggest piece of diversification in your marketing plan, is you're actually turning over the decision, the pulling of the trigger, to someone else. And someone else's opinion, someone else's thoughts, and that someone else is us. With JSA and the team of about 5 or 6 people that we have, myself included, that run that program. So that's, in a real simple way, that's what the program is. There's a couple of details that I don't want to get too bogged down in, but it is that diversification tool. We are a third party. It's a cash sale. We don't speculate with this. When I say we don't speculate, we're not out there trading, buying and selling and buying and selling, and whatever happens at the end is what price you get. We're hedging. We always have to be short. So one of the things that is a real key differentiation between you maybe having your own trading account and trading whatever the heck you want to trade, we're out there saying we got a chunk of bushels that we need to hedge. And a hedge is a sale. For someone with the long cash position that your sale to Ursa's long, we have to have short hedges. So we're always trying to determine when to sell. That's the most important decision that we make every single pricing period of every single year. We may make decisions on buying something back. We may make decisions with some options from time to time. But if I've learned something in the 12 years of history that we've had this program, the singular most important decision is when do we make the first sale. It's the singular most important decision. If you start bad and you try to make up for it, you're normally taking on more risk. And as my dad or grandfather would say, if you're in a hole, stop digging. Okay, so the key is to make the first sale at an advantageous spot. And at a profitable spot is obviously what our goal is. And then hopefully we can add from there some premium and some other strategies. So that's a little bit about what the program is. Performance is always key. This is fall corn's performance. Our performance is the dark green line. The fall market is the light green line. We are not perfect. We do not hit home runs. And if there's something else I would tell you about this 12 years of history, it would be very difficult for me to have made this statement 12 years ago because I don't have all the history. Here's the history of our program since it started, okay? This is the 2014 to present JSA performance on corn. Fall, winter, summer, 3 months a year, 3 options a year, ever since 2014. The average in the marketplace in that period of time has been 393 right here. The median price is the price at which, the average is 393. The mean price, which means 50% of the days were above this price and 50% of the days were below that price, where am I at? I said that backwards, sorry. 393 is the median price, 50% of the days above, 50% below. 452 is the mean price, which that's an average like we all think of, and our price is 473 over that 12-year period of time. We do not approach this program to go hit home runs. We do not. We do not get aggressive and try to get over our skis and put on highly leveraged positions, even though we could. We always have to be short. We don't approach it this way. Our approach is to be better than average. Our approach is to be in the upper half of the marketplace. Sometimes we're in the upper 30% or so in some years, but our long-term performance history is a consistent single. Okay, and a couple of years might be a double in there. A couple of years might get a walk. But there's a consistency to what we've done the last 12 years. And that's probably what I'm as much proud of as anything else. I can look at this last year's performance and say, man, we did a great job. Holy cow, we didn't like $11 beans or $11.70 for the winter, and we had 2-year $12 beans in the fall for one of the programs. It was a good year. I'm not going to downplay it. But what I'm the most proud of is we've been doing this for 12 years, and we've had pretty consistent returns above the market for corn and soybeans. And I think that's why it deserves a piece of your marketing plan and diversifying a little bit of who makes that decision on pulling the trigger for the futures price. Here's the soybeans. It's the same answer, okay? 998 is the median price, 50% below, 50% above, out of all those days for the last 12 years. 1106 is the average over this whole period of time. This is January of 2014, for those who are watching that. And our price for that whole period of time average is 1144. So this is the consistency of our performance. Definitely some years are better than others. We've strung together a couple of decent ones in a row. I will also tell you one thing we've learned in the last 12 years is this program performs better in carry markets than it does inward markets. This whole program is designed to sell ahead. It's designed to sell a carry. It's designed to sell something that's higher later. It doesn't do as well when the highest price on the board is the spot price. That's hard to make money in the future when the best price is now. And we are in a carry. Okay, we are in a carry market. Yes, July corn versus Dees has an inverse, but that's a different set of circumstances today. But we're in a carry market, and the value of selling grain ahead is there in a carry market. That's why this program performs better in those types of environments. We were inverted pretty heavily from 20 to 21. That was one of our worst years. We couldn't sell anything ahead that wasn't a 50-cent discount to the spot price in beans. It was a tough time to make that program work. But if you haven't done this program or you have kind of off and on, I'd certainly encourage you to get some more details from the folks at URSA. There is a fee, just like if you sold an HTA, there's a fee for the HTA. There's a fee for JSA Select. Help me out, is it 7 cents, I believe, which is not that much different than an HTA fee for a 1-year fall. I mean, so it's kind of similar to the HTA fee, and the HTA is not on top of that. It's 7 cents in total. But yeah, I think I'll leave it there, and just if you guys got any questions about it, I'll go, because I don't want to get too bogged down into a ton of detail, especially with a pretty good amount of the group here having some history with this program, but I wanted to spend a little time on that. We also give all of our updates I guess the last thing I'll say about it is we communicate everything that we do. We send out a weekly update on Fridays about the program itself. Anytime we make a trade, we send out a very quick trade notification. We sent out a trade notification yesterday. We sold some more of our 2-year beans. We're 75%, or no, 2-year corn. It's 2-year corn. We went from 50% to 75% sold on our 2-year corn because our average price is upward at the high 460s. Yeah, 469, I think, almost 470. And we just feel like the reason we did that is we've made 3 attempts at 450 new crop corn. We haven't gotten through 447. We've had an order working to sell this 25% for 2 months at 449. I always preach, don't ever put in orders at a big fat round number like 450 or $5 or 550. So our order was at 449. We had that order working since the early part of October. And we just couldn't get there. We kept bumping our head against 447 and we'd fall apart like we did last Friday. We got to 446, 447. We just said, look, that's close enough. We're going to sell it. The market doesn't feel like it wants to go any higher than that. So we got more aggressive on our 2-year corn as well just this week. And we sent out a notification to all the participants, all of the commercial participants. We send those notifications to URSA farmers, and then they turn around and relay that to producers, to all of you. We do communicate the same stuff on the app if you want to look at the app. And that's my last slide. That's what I have. This is my disclaimer. This says everything I say is an opinion. And there's a 3-page version of this that our lawyers sent us, and I condensed it down to 3 sentences because I thought 3 pages was stupid. So that's why we pay lawyers. Any questions about anything?
Brian, we appreciate it.
Thank you.
So again, I want to appreciate everybody taking the time to come out tonight and see it. If you have questions as far as the program and things, why does URSA do a program like this? Brian said it's not about generating fee income, it's about helping you market your bushels. If you're successful, we're successful. We'd like to have an opportunity to buy the bushels. We think there's a good opportunity out here, and I think the market is going to give some opportunity. One of the things we try to do when we send out these updates is we challenge you, or at least showing you someone else is taking some action. Maybe it should trigger your mind. Maybe it's time to take a little action. Put some additional sales on it. Participate in the market. We used to have a broker we worked with almost 40 plus years, Albert Linkitis, and he preached every day. Participate. And we think that's some of what we're doing here. So if you have questions about the program, we do have, Brian didn't tell you, but this program will kick off and it starts. He's going to want to start trading active bushels here the first week of February. And so we've got the month of January. We're not going to put a hard sell on you folks. We're going to ask you. We've introduced you here as far as what the program is. There's some new folk faces in the crowd on here. If you want more information, we'll gladly give it to you. We're not going to go hard sell, but we think it's a good program. We think it's got merit, and so if you've got interest, talk to your location, talk to Larry, talk to Peggy, talk to Susie, talk to Scott, talk to Tanner. There's folks in here that can help you. You can put bushels in, but you need to have the bushels enrolled here by the end of the month. So, any general questions for me? Anything up front? You got time. Nobody's throwing nothing. Well, good. Again, I want to say, very much appreciate it. We do have our river is closed today. We still have quite a bit of space. We've got space at Meyer. We've got space at Warsaw. We don't think there'll be an issue there. We've got limited space in Missouri and Canton. Got a little bit of space up at Wayland, but we're here. We're here for you. So with that, I'm going to turn it over. Thank you. Everybody be careful on your way home. And if you have questions, contact us. Thank you, everybody.